One thing that makes us unique too in the marketplace is just our focus on the analysts and associates that are really driving the deal flow for the firm. And one of the reasons why I've stuck around at Insight for a decade, and it's the only place really I've ever worked besides the astronomy lab.
How does someone start with an astrophysics degree end up as managing director at a venture capital firm? Thomas Krane at Insight Partners has transitioned from the astronomy lab in college to the VC world early in his career. Now that he's spent a decade watching companies rise and fall, he's got a sense for what gives a business idea or tech innovation staying power. According to Thomas, knowing where innovation is happening in next-gen security, DevOps, and automation is really just the beginning. Being able to work with CEOs hand in hand to get them to that level is where the real value lies. IT Visionaries is brought to you by Salesforce Platform. Are you ready to create better, faster customer and employee experiences? Build and automate rapidly using the Salesforce Platform's low-code tools to click, create, and ship from anywhere. Check out a demo at salesforce.com/platform.
9 trailblazers have answered the call to build the best app for a nonprofit in only 2 days.
This is a powerhouse crew here.
I hope everybody brings it. This is Legends of Low Code.
Welcome everyone to another episode of IT Visionaries, and today we have a special guest. He is the managing director of a company called Insight Partners, Thomas Krane. Welcome to the show.
Thank you very much, Albert. Really excited to be here.
Listen, we're excited to have you. You have a unique seat and perspective of all things tech and specifically cybersecurity. But before we go into what you know the best, we're going to get to know you a little better. It's time for the lightning round. The lightning round is brought to us by Salesforce Platform, the #1 cloud platform for digital transformation of every experience. Thomas, this is where we ask you questions outside of the realm of work so our audience can get to know you a little better. Are you ready?
Let's do it.
All right, listen, you have to be, and I'm pretty confident, you are the only person who's been on our show with a degree in astrophysics. How did you get into that?
I had a very inspirational high school physics teacher. So, thank you to my high school, inspirational high school teachers. And I went to the University of Pennsylvania and I got immediately matched up with a professor who was doing research on undiscovered clusters of galaxies. And I was like, now that sounds like something pretty mind-blowing to be able to study and spend 4 years dedicated to. So I will say, by the time I finished my time at Penn, I had a master's degree in astrophysics in 4 years, and we had literally discovered close to a dozen unknown clusters of galaxies, which called into question some of the basic and fundamental estimates of baryonic matter in our universe. So,
all right, so that's what I was next asking. Do you still observe the stars? It sounds like you do.
Yeah, I'll go out for the occasional disappointing meteor shower. Unfortunately, I decided to live in the one city in the world where you don't get much of a night sky. That is New York. So, but I managed to get a telescope that is still powerful enough that you can see the rings of Saturn from my apartment in Brooklyn. So that worked out.
All right, so I'm not a astrophysicist, nor do I not know too much about astrology. How powerful of a telescope do you need to be able to see the rings of Saturn?
It actually doesn't have to be that powerful. I got one that's probably a little bit overkill. You could probably see like nearby galaxies and other things if you were to take it to a truly night sky. But I had to beef up the power to compensate for the light pollution in the city. So.
Makes total sense. One of the things that you do in your role is you're an investor, and of course you evaluate companies. What's one of the craziest investments, and it doesn't have to be at Insight Partners, that you made where you were like, man, I don't really know, but something about this makes me want to invest?
I would say I probably have a crazier anti-portfolio than I, in terms of the stories of companies that I met very early in their life cycle that went on to be just absolutely incredible success stories where unfortunately we did not invest. So, part of the beauty of Insight is you spend your first few years out there just meeting entrepreneurs, and you meet some folks that are really building some incredible stuff. And at a young age, you're still learning. And frankly, I was talking to companies well before they had really commercialized their technology, but to meet them right when they were on the cusp of getting really huge. I mean, I will say, even Mr. Elon Musk and I traded emails at one point during my summer internship at Insight. Ultimately, we didn't invest in SpaceX, but he was also a physics major at Penn. So I was sure to work that connection. And he actually replied to my email, which I appreciated. So
that's pretty awesome. Listen, the anti-portfolio is always really good because I'm with you. When you first hear about a company before it has traction, You got to admit, some of the things just sound insane. I remember the first time I heard about eBay, being a 16-year-old kid, and I was thinking to myself, what do you mean I just pay this person across the country some money and they're going to ship me their mountain bike? And I was like, what if they don't ship it? Like, I had all these questions. Like, I don't understand how this is going to work.
Yeah, I mean, I would say the same thing about robotic process automation. I won't name a specific company, but everyone's like, robots, software robots, like what? And of course, now we've got many decacorn or unicorn type companies that have blown that sector out of the water. So, sometimes, and it just, you have to reimagine the art of the possible in my world. And we never, lose that humility about knowing that we don't know anything.
I had a friend as well that went into robotic process automation, and he was like, hey, you should join me. This service company's gonna be great. I'm like, I don't understand what you're talking about. A robot on the computer? Like, what does that mean? And he's like, no, it's in the software. And I was like, oh, I don't know. Well, Thomas, I appreciate you sharing a little bit about yourself. Being vulnerable is and humble is one of the things that we see that's a common trait among the most successful investors, because it gives you that hunger and curiosity. Let me ask you this, because your Insight Partners is a unique company because it's not quite like the other venture cap firms where it's usually typically a smaller team. We looked at this up. Insight Partners says it looks like over 400 team members. Give us an idea. Tell us what is your company all about? What's it do? How you guys do it?
I have the benefit of some historical perspective here. So I've been with Insight, literally this month is my 10-year anniversary since I was a summer intern back in 2012. And, when I joined Insight, we were probably 40 or 50 people investing out of a $2 billion fund. Today, you're correct, we're north of 400 people. We're investing out of a $20 billion fund. And so I've seen us go through our own kind of scale up journey in terms of scaling out the team, and the number of investments that we're doing each year has grown sequentially. But we've actually been remarkably consistent in terms of our focus, which is finding amazing software companies and entrepreneurs. Usually they're next-gen oriented technologies built around the premise that cloud delivered software is just better than many of its on-premise incumbents, and that cloud penetration is still a fraction of where it is in the future. And so that has been really our mantra from the beginning, is just go out there, find great companies. Doesn't matter about where the geography is. It doesn't matter what specifically within software. If it's B2B SaaS, we're interested. And frankly, even it doesn't matter what stage it is. I'd say earlier on, when I first joined Insight, we were tilted a little bit more toward growth equity and private equity in terms of deal size. So we would do a lot of control transactions and buyouts and roll-ups. We still do have that practice as part of our portfolio. It's very much a growth-oriented segment of that market. But we've gone earlier, and we've gone into Series B and even Series A and earlier stage than that. And in that case, again, we just are looking to find great entrepreneurs to work with. But, the idea is that the machinery that we can bring to bear to help the companies, that scales as the companies scale. Because we see companies everywhere from 1 to 5 to 10 to 20 to 50 to 100 to even $1 billion in revenue. And we know what works. And in some cases, when we're the majority owners in those companies, it's really on us to show that value add is not just a theoretical marketing value add, but it actually has to work, because in those cases, the buck really stops with us in terms of the risk ownership. So, that's a little bit of insight in a nutshell in terms of our positioning. But I just say, one thing that makes us unique too in the marketplace is just our focus on the analysts and associates that are really driving the deal flow for the firm. And, it's one of the reasons why I've stuck around at Insight for a decade, and it's the only place really I've ever worked besides the astronomy lab, in the sense that we look at those folks and the outbound team to really guide our investment strategy. They are the tip of the spear of what's out there. They're the ones that are building those relationships and the shepherds of entrepreneurs through the Insight system, both through an investment process, but of course post-investment and beyond, all the way to liquidity. And I've made some lifelong friendships and relationships with CEOs that have gone through that journey with me and have trusted me and entrusted their businesses with me over a half-decade whole period. And so just really excited to be a part of some of those success stories. And I think it's core to our DNA, is looking to our junior people and the young people on our team to drive the future of where we're going.
That's what's interesting about you, is you have I guess, seen it all at the company, right? You said from the very beginning at your internships, you're writing and trading emails with who would become some of the most influential CEOs of our time. And for yourself now as the managing director or managing partner, where do you personally, I guess, invest your time? Is it more like building up the analysts inside of the company? Are you still meeting with startup companies? Do you only work with companies that are at, 500 million and north of revenue? Like, where does your time spent now?
Yeah, look, I mean, my time is, in terms of the companies I work with, is very much a reflection of our own portfolio construction, which is, there's a segment in A and B and some of the more fundamental company building and product market fit types of questions. There's quite a bit in kind of more the growth stage, where it's all about how do you go from a handful of sales reps to an army of sales reps located internationally, and do that in an efficient but effective way, and avoiding the pitfalls of that we've seen through our own experience, and all the way through to late stage buyout. I mean, there's actually multiple examples in my portfolio of companies where we actually led a venture type of investment, call it a minority investment, and ultimately became a source of an exit for that company. But the founder CEOs remain as the founder CEOs and continue to drive the company to the next milestone. It's a different option. It's not selling to a strategic. It's not selling purely to a buyout shop. It's almost like you're doubling down on the partnership that's already working, but you can kind of consolidate the focus, consolidate the cap table, and orient the cap table to drive and optimize the long-term success and outcome of the company. So those are the kinds of situations that we really look for, because they can be very creative, but they can also just be very fulfilling in terms of seeing those companies go all the way absolute to the distance and not having to punch out early just because we got caught in a certain part of our hold cycle.
Well, listen, you have an interesting perspective because you've gotten a chance to see, of course, companies succeed. You've also, of course, seen companies fail and not make it. And you have interesting expertise. Directly from the site, it says you have focus areas of cybersecurity, DevOps, IT automation, application software. I'd love to kind of hear what you're seeing the market want. You had mentioned earlier that cloud, for example, cloud is just beginning, which sounds insane. We keep going over this factoid with a lot of different people that are on our show, but it's every time someone tells me the number or what they think the number is, it's always mind blowing. So I got to ask, right now, what percentage of workloads are in the cloud? We've had people say it's all kinds of numbers, but I've never heard anyone say a big number. what like we're still basically just the beginning. In your estimation, what percentage of workloads are in the cloud today?
I think it's close to 20% today.
20%.
But I think that also understates the fact that this is just the first wave of cloud, right? I mean, there's going to be, I think, tertiary or secondary, tertiary waves of cloud adoption. Companies might even boomerang back and say, hey, wait, I moved all this stuff into AWS or whoever, and now I realize that actually there may be an economic trade-off for me to actually insource it and have my own cloud. And so there's going to be all sorts of boomerangs back and forth around that. But if you look at SaaS versus kind of on-prem software penetration, that's where I also think there's just a tremendous amount of opportunity. And you could extrapolate that to individual mobile devices, but also to edge compute and what's happening in terms of the Internet of Things and connected devices that just make the surface area of this just so broad and just still such early days in the landscape.
Yeah, and you already hinted on earlier with the RPA category. When you see these different categories emerging, what are you seeing in regards to categories that are getting a lot of product market fit, categories where there's a lot of businesses that are getting a lot of enterprise value out of, in emerging categories where you're like, wow, this is going to be a new sector. When you see how software is being built, because I think that's the most unique part about being inside of a venture cap firm like yours, is you get to see basically how the future is going to be built. It's like, what tools will the future be built with? And it's like, you invest in those tools, of course, it's going to work. It tends to work out. What are you seeing in regards to adoption? How widespread is RPA? How widespread is some of these IoT applications? What are you seeing in regards to picking up in velocity of how we how we're going to build the future, basically?
Totally. I mean, look, I would say fundamentally, going back to the point of humility and a broad anti-portfolio, we've realized that we're not great at predicting the future here and sitting around and pretending to have a crystal ball. So, I mean, at the end of the day, we're looking at the leading indicators of commercial momentum to inform a huge degree of our investment hypotheses. And then, the benefit of having such a broad portfolio is we've got just a really deep bench of experts and other entrepreneurs that live this day in, day out that we can draw from in terms of, is this truly a disruptive technology approach to the market, or is this an also ran and kind of an iterative improvement upon a very established and mature kind of solution set? And so, we're constantly challenging ourselves on that. But ultimately, if the momentum is there, companies are doubling, you can usually sense there's some degree of kind of pull from the market, then that's usually a pretty good indicator that there's disruptive potential or an exciting market opportunity in front of the company. And I would just say there's so much secular change within infrastructure and cyber, where I spend a lot of my time, that it's not hard to imagine that the solutions that were built around this paradigm of data center security and a perimeter that you need to fortify and build up are kind of all out the window in the world of cloud and distributed workloads and ephemeral containers and remote employees. And so it just requires a totally new paradigm. And at the same time, while everything is totally dispersed, it's also as interconnected as it's ever been. And that notion of the software supply chain and just interconnection among companies and commercial supply chain has never been more poignant than it is today.
Give us an idea of, what you're seeing fundamentally change. You mentioned, commercial viability is often the best way to evaluate this. What are some sectors that you're seeing like, hey, they're getting some serious velocity, which you think is going to impact more companies in the future?
So yeah, I'll reference an investment we made earlier this week called Perimeter 81. It was a follow-on investment that we did alongside the lead investor, B Capital, but we invested 2 years ago as a lead investor. And the idea is, as you have highly distributed workforces and no longer a centralized kind of network architecture around going into the office, and there's kind of the central office and maybe there's some hubs that are connected to the central office, it's just your endpoint, your computer directly to the cloud or directly to the SaaS application. The idea is now the new corporate network is the open internet. And there's a tremendous amount of need that comes around that in terms of what are the security controls and visibility that goes with that. But how do you also deliver an experience that your business users can work around? I mean, it doesn't make sense to connect from my home through a VPN to a central network when that central network may not even be relevant 5 to 10 years in the future. And fortunately, there have been some foundational technologies that have enabled this, and software-defined wide area networking, SD-WAN as we call it, has been a key kind of initial innovation that's enabled that. But that's where we see a huge degree of opportunity around kind of network security, which besides endpoint is probably the biggest market out there within cyber.
Yeah. So cybersecurity is one of the hottest areas and categories. It's one of the things that becomes, I guess it's every company's problem now, meaning it can quickly become everyone's problem. And we see a lot of investment there. According to a research that was done among CISOs, this was done by our lead sponsor, Salesforce. It's the top data security trends for 2022. They were asked CISOs what different strategies are they going to invest in and become the most effective in defending your organization against cybersecurity attacks. A lot of them talked about, 77% talked about multi-factor authentication, which I thought was interesting because I always assumed that would be 100% in the past. I was kind of taken aback that this was something they were going to invest in, right? 72% identity and access management, 60% data encryption. So there's a lot of the things that we would normally see. Is that something that you're seeing in the cybersecurity space where it's like, are companies continuing to invest in tried and true tools, or are you seeing new emerging technologies forming? Because what you just talked about with Perimeter 81, being able to stand up and securing networks wherever they may be. I know there's a lot of because I was at part of one in 2018. There's a lot of companies trying to do that. It sounds like it's just not quite figured out yet, I guess, because it requires probably equipment requirements and it's not truly to the software layer yet. That's one guess that I'm guessing is potentially a problem.
That's probably why it didn't work back then. Today it's all software, so that helps. Yeah.
Yeah, but like, give us an idea of where do you see these investments going? Because in that security trends, it sounded like they were doing a lot of like things that maybe people already knew about, but I didn't know if it's just because those companies are getting that much better, or there hasn't been, let's say, a widespread adopted better solution yet, that as far as you could tell.
Yeah, look, I mean, I think you need to have a 10x improvement on the incumbent technology for you to actually have a viable kind of quote next gen approach. I mean, you could take something as kind of ubiquitous as endpoint security, right? Or
Yeah.
antivirus. The incumbents there, the last gen, the McAfee, Symantec, like those were rules-based approaches. They would go out, do research, find signatures of bad stuff because it was out in the wild, then they'd embed it back. And so then you do the scan, and everyone loves those old school cybersecurity scans on your laptop. They take forever, and they'd be like, oh, we mashed it up. There's a virus here. So it's like, it was a very reactive approach, and it was ubiquitous because you had to have it. But those solutions had efficacy rates in the 50-60% range, and so then you had AI-based anti-malware come onto the scene, and companies like Cylance, which we were investors in and sold to BlackBerry, CrowdStrike, of course, and now SentinelOne, where we went on to also become investors. And this is where you can actually apply machine learning to a setting in the wild, where you're able to take those efficacy rates of the incumbent technologies and bring them from 50% to 99.59% from an anti-malware perspective, using machine learning algorithms on literally the ones and zeros of the executable binary of the file. And so it's just a fundamentally just new paradigm of how you can approach that technology. You could say the same thing with intrusion detection systems and traditional IDS, IPS, and now you apply that to what is called now network traffic analysis. And again, you're applying machine learning and AI to detect what are truly anomalies and potentially malicious anomalies in a way that was never possible before, when you were just kind of checking signatures of known bad against what's out there in your network. And so there are these true like 10x improvements in technology, and a lot of them have been AI enabled, that have come and really taken the market by storm. But going back to your question, like, yeah, there is just a ton of blocking and tackling still to be done. There's still a shocking amount of lack of adoption around sort of simple hygiene. And I mean, I'll reference an article that I think came out in the Wall Street Journal earlier this week, that it was like, what are the top mistakes that lead to breaches at enterprises? And some of them were remarkably simple things, like have you updated your certificates, your IT certs? We have a company that does that, by the way, called Keyfactor, which is doing super well. But those are ticking time bombs in your infrastructure, and they're meant to expire. So if you're not ahead of that, it can create huge security vulnerabilities or operational issues. Another one they mentioned was, updating the software on your endpoint. Like, have you patched? We have another company that does that, by the way, Automox. It's remote cloud-based patching, and so it's but like, again, very simple. And the last one, I think it was vendor risk, which is another really hot topic. We have a company called Prevalent that helps automate the vendor risk assessment process in third parties. The prototypical example being Target, which got breached via their HVAC provider, who happened to have the crown jewels access to the network. So they go from some small provider into the corporate network of a global 2,000 company. So you're only as weak as your weakest link, and that can be this long tail of thousands of third parties that you have. These are the kinds of blocking and tackling that they sound simple, but if you're not ahead of them, those are the exposure points that can be potentially catastrophic.
But we had another one of the CISOs come on our show and talk about how, like, hey, you might be looking for that next great vendor solution, but the reality is like, you're not even doing what you need to do today that would help really secure your business. So don't worry about what they're doing over there. Fix your own stuff and get going. When you see, one of the things I hear in your explanation of things, like what's worth investing in, whether it's a company on a commercially viable basis or inside partners for funding, is this idea that it's got to be 10x better. I'm curious, because we see every year there's new products and services being launched, being backed. How fast do you think innovation is occurring? Are like the new products of today really 10x better than the ones of the past? Like, are people innovating that much faster, like on a year-over-year basis too? Because we have existing companies that are also trying to push the edge, right? Some of the companies you've backed, maybe at series A or B level, like every year they're trying to get better and better and better. I feel like, like you have Moore's law talking about how like the cost of memory is going to reduce by half every year, or whatever the case may be. Like, is innovation expanding at that level where it's like each year's version is like it's getting that much better? Because on sometimes I think it's not, but then I look back, like when we look at a hardware level, if I look back to a computer of 5 years ago, like it's unbelievable how slow it is compared to what a computer is today. Is software innovation, do you see it moving that fast, or is it more marketing hype, or because there's a lot of companies claiming to have breakthroughs?
Well, look, I mean, even whatever it was 20 years ago, if you were starting one of the first generation SaaS companies, you still had to buy the equipment, and
Yeah.
and set it up and like host it like in your garage or whatever. So now not only is that compute readily available, but all the tools and services that you need as a developer or engineer to just get up and running. And in fact, today's developers, they're barely writing code. I mean, I had one of our summer interns actually told me a funny thing. He's like, I studied computer science at like a top university, but I don't think I could actually write code to build an application, because all I do is look up, what are the components I need to just assemble that application online, and then, that's the application. But that's how software development is done today. It's aggregating components that have already been pre-built, that are battle tested, and open source is a huge component of that. And that just enables innovation to happen at such a faster rate, because the barriers to entry to actually starting something have been lowered drastically. And at the same time, you've got incumbents that were built more in this world of client server, and where they were kind of, everything was a big monolith in terms of the architecture. And that's a very disruptible premise to go against when you're a next gen company starting from scratch without sort of the burden of the tech debt to work against you. And so I truly do believe there is a much faster pace of innovation happening today, owing in part to these kinds of development tools and just sort of the methodology of developing software and SaaS software that has enabled it to come faster. And I would also say there are certain ecosystems that have really cultivated this in an effective way. So we've been very active in kind of companies built on top of Force.com, for example. And, it's a great way to jumpstart not just, the engineering and application building from an innovation perspective, but also the commercialization of it. And so this is not meant to be a commercial for Salesforce in terms of my response here. But, even as a venture capital, that's a capitalist, that's an attractive value proposition in terms of the speed to market and speed of innovation.
Oh, I agree with that part 100%. I mean, so my personal foray into that was not for Salesforce, but it was for Shopify. I built an app for Shopify. I mean, it was never meant to be a huge company, but it generated revenue. It was like 5 days. It went from spent 5 days making it, and I was plugging and selling subs right out the gate. I was like, I couldn't believe it. Like, this is awesome. The thing that you just mentioned, software supply, I just started thinking about software supply chain, because you mentioned it earlier in the conversation as well. And we had interviewed one of the co-founders of Sonatype, and they were talking about how
they coined the phrase, by the way. I didn't invent it. That was all Sonatype.
Yeah. They're the ones that came and said, like, dude, software today is, no one's actually coding anything. They're just kind of like Legos. Like, oh, I want a OAuth. Oh, I want image recognition, or I'm going to go use this service to do some data tables. And they're putting it together. And when one piece fails, they were talking about how, because software is cobbled together, kind of like the way you described, is sometimes companies don't recognize and they can't spot their vulnerabilities because they're not sure, or they don't realize that the component part that they've put in, or maybe a developer like 2 years ago put in, has been compromised, and they don't even know it's in their code.
Yeah, absolutely true. And it's how everyone's building applications today. And so that's why you get these kinds of critical vulnerabilities like Log4j that come out, and they require a tremendous amount of cleanup work. The other thing is just getting ahead of what are those new vulnerabilities before the bad guys start abusing them, those so-called 0 days. We have a really cool company called Recorded Future that it's a great example. I mean, when we invested in the company as a minority venture investor and ultimately became a majority shareholder in the company throughout the course of the life cycle of our investment, it's a really great story in terms of partnering with the founding team who's still leading the company today, but through just a transformational evolution in terms of the company's scale. But at the same time, that scale has enabled them to track and identify threats in a way, and cybersecurity threats in a way that no other company has been able to in the past. And so it's just been one of those sort of self-reinforcing, the more data you have, the better you are at kind of understanding new patterns that are emerging out there in the wild. And, they're scanning everything from open web to dark web, deep dark web, and doing it in a machine-oriented way. So the dragnet is totally automated. And that's, created a really interesting sort of response on the part of folks that need to be proactive about, do I have, exposure to these kinds of 0 days that I may not have known about beforehand?
All right. So now I got to ask, because you clearly have good, at least understanding or conceptual understanding of how software development is going to come together. Meaning you're able to recognize, like, hey, as this scales, this problem will open. As this problem closes, the reality is another problem or an opportunity will open. You yourself, were you a software developer, or did you develop software prior to Insight Partners? Were you building things, or were you just studying physics?
No, I mean that was actually the exact transition that led me to Insight. So I like to say we were doing machine learning in the astronomy lab before it was cool. Back in 2011, we were doing it for supernova detection based on images. So literally, it was just images of the night sky one day later. I'm like, do you see a flash that happened? So because supernova are pretty important in terms of determining the age of the universe and those kinds of measurements. So it was really applied machine learning. We were doing Monte Carlo simulations as well. I was building MySQL databases. I remember very early on in my summer internship at Insight, everyone was talking about NoSQL. I was like, whoa, I was just building MySQL. What is this NoSQL thing? And it got me very excited. And I would say the other aspect, which I think has played well in terms of my own career progression at Insight, is when I joined the firm, a lot of my peers and fellow summer interns, were, talking more about e-commerce and kind of some of the sexier consumer-facing companies out there. So Living Social was one of our notable investments at the time, or Tumblr, and of course Twitter now. But I would say I was kind of more focused on the infrastructure stuff, and we'd built a really great infrastructure portfolio, and I just happened to be more, I guess, or less afraid to talk about that and kind of focus on that early on, which has been great because 10 years ago, I don't think a lot of VCs and mainstream VCs were talking about cyber and dev tools and IT cloud in the way that they talk about them today. It was really kind of almost like a back office thing that was like it was like a vertical app. It wasn't even considered its own sector in the same with the same kind of cachet as it is today.
Oh yeah, listen, I was in the same problem as I guess your peers that you mentioned. By the way, for those who don't know, Living Social was like Groupon back in the day. I don't know if it's around anymore, right?
Yeah.
Hey, listen, consumers are fickle. Like we as consumers, listen, we move from one thing to the other very, very quickly. But I like Thomas. I agree with you. Now that I know what I know, I would have invested more of my time and energy building tools to help people build. There's a lot of companies now that are like API first, orchestration layer type products where it's like, hey, if you want to integrate smart email in your system, like you would build and integrate NILAS or something like that. Like you wouldn't build your own AI recognition tool. There's like so many developers now developing for developers, HashiCorp being a huge one, right? Like that's, I invested in HashiCorp after it seemed like every person I knew how to use it. Like every developer I talked to, we all use HashiCorp to set up our infrastructure. Like, well, what is this thing? I don't know what it is. Like they built a tool for tools, for building, tools for building. Is that kind of at the core of your personal investment thesis, or do you like consumer? Consumer is one of those things that's like really sexy because, of course, I want to build the next Yeti. Like it's just a cup, but it's $1 billion cup.
No, look, I mean, we have an amazing consumer portfolio. It's not where I spend much of my own time personally. I just the predictability of B2B enterprise SaaS is just it's something that enables me to sleep better at night, I guess. But yeah, I mean, the idea of catering to this growing developer community, and every company needs to be a software company. If you look at the replacement rate of the Fortune 100 and what that implies in terms of the focus and need to focus on innovation, I think that all speaks for itself in terms of that market opportunity over the next 5 to 10 years and beyond, frankly.
So I am also curious, how much time do you get to spend now with, let's say, emerging founders? Do you get to do that as much, or is that a smaller part of your day now?
No, I mean, that again, going back to the original mantra of Insight, like the lifeblood of our firm and of our strategy is, the analysts and associates that are on the phone sourcing, reaching out to companies every day. And, we'd be doing ourselves a disservice if we didn't spend a disproportionate of our own time, enabling that team and helping make sure that the stuff that they're finding is getting properly routed through the system. So there is not a day that goes by in my life at Insight where I don't spend time with multiple emerging founders. It's the most one of the most fulfilling parts of my job. And then, of course, the companies where we actually do make an investment, helping them think through some of those challenges where I feel like I've actually seen the movie before a few times now. And, sometimes I get teased that I work with a lot of companies. It's true, but I actually think that makes me more effective because I've got a better sense of what is market, what are common pitfalls, and what are the ways to avoid them. So it's been incredibly rewarding in that perspective.
So I got to ask, when there's when a company is, just emerging, like they're just getting started, there's no, like you said, there's no revenue to like justify where they're going. They're kind of building with a vision that says, hey, I want to go there. What, I guess, are you listening for? What are you looking for in the founder? We've heard from multiple VCs, it's undying dedication, some type of knowledge about the product or the marketplace that the founder seemingly knows that no one else knows. What are you personally looking for when you start hearing these things? Because as you know, a lot of ideas they're not going to work out. Like that's just the reality of the business in general, right? A lot of things are great ideas, but for whatever reason, the marketplace doesn't comply. What are you looking for to find that next, like that emerging startup founder? What are some of the things you look for?
I mean, I'm looking exactly to bridge the gap you're just talking about, which is, entrepreneurs, especially in early stage companies, they're so excited to talk about why their technology is going to be disruptive relative to the incumbents and all of the, amazing advantages that it will enable. But if they're not connecting it to the commercial and revenue side of the equation, even if it's pre-revenue, if they haven't thought through that progression, then that to me is something I take into consideration of whether we lean in early or we, let things play out a little bit longer. And I think, even if you're $50,000 of monthly recurring revenue, if you're thinking about how you go from 50 to 100, and that's like a central part of your kind of pitch to me, then that to me speaks, that actually speaks volumes about you're tying you're connecting those dots from not only do we have disruptive technology, but we know how we're going to get it into the hands of our customers and users in a repeatable fashion. So, and not just, one or two channels that we kind of got big hits with, but this is how we're going to scale it up and blow it out.
All right. My final question for you is, it was great hearing this because this ties into founders and working with founders, building and trying to shake up markets. What is your tolerance for failure? And let me bring it to perspective. One of my favorite entrepreneurs I've ever read about is James Dyson. James Dyson famously developed 3,127 prototypes before he actually figured out the Dyson vacuum. Now, that's a mind-boggling number because I feel like I wouldn't have made it past 100. You know what I mean? Like, I don't think I would have made 100. At number 100, I'd be like, I'm done. I can't figure this out, right? He went to 3,127. Along the way, someone had to be there supporting this endeavor. What would it take for you to continue to support an entrepreneur after 3,127 failures? Or would you have tapped out a while ago, like, hey man, I don't think you got it?
Look, I mean, the mantra at Insight here in terms of our appetite for failure, if you will, is, rather do an investment that had a sound thesis and good decision-making up front that underperformed than, overthink not doing the investment that goes on to be the next HashiCorp or ServiceNow or whoever, right? And so, unfortunately, there are countless examples of us not being able to get out of our own way and overthinking all the reasons of why it won't work. And it's always easy to take the negative view. It's always easy to say, this is why it's not going to work, right? And our job is to, with good decision-making and good informed hypotheses, think of what is the art of the possible and can you imagine that ideal state of the world that enables us to become, a 10x plus type of company? And we're always, in every single one of our investment theses, and this is something we've made standard, a little bit of the sausage making for you, but we're always looking for what is the tail? What is that, okay, this is the expected case. This is, sort of status quo execution. This is sort of the downside case. This is the execution's good, the upside case. But what is that tail case? How do we get really lucky? And if that tail isn't there or it's not, sound, then we'll probably consider that in the investment. So.
Yeah. I've asked that question to a couple of different people and it's like, dude, you'd have to really, really believe. We've heard all kinds of different answers. Do you think you could ever stand by a friend? Let's take Insight Partners out of it. Like, what if your friends was building software and was like, this is my 3,000th version of it. Like I still haven't figured it out. I'm getting closer, Thomas, but I haven't gotten there. What would you say? Hey, keep going, or hey,
I have plenty of friends that are entrepreneurs, and I know they've all had their dark days, and they're all killing it now. So
there you go. Keep going.
Stick with it. Yeah.
I love it. Thomas, it was awesome having you on the show, man. I appreciate you sharing everything that you've gone through and experienced, from physics to being that intern chatting with Elon Musk to where you are today, a managing partner at Insight. Insight Partners. It is pretty exciting to see the company. For those who want to check it out, Insight Partners, their website is exactly as spelled, and you can check out some of Thomas's investments in addition to their company. Pretty exciting stuff. Thanks for being on the show today.
Thank you very much, Albert.
Hey, thanks for watching. Subscribe to this channel for more great IT thought leadership. And thanks to our partners at Salesforce Platform for making this show possible. Go to salesforce.com/newsletter to discover timely insights and useful tips tailored to your role.